All right, welcome everybody. It's Pup's office hours. It's March 16th, 4 o'clock. Sorry for the time change. In a writing course for this month, and the 7 o'clock slots for Wednesday are pretty tied up. So just for probably one, maybe two more sessions, I'm going to do these at 4 p.m. Eastern Standard Time. So I do apologize for the time change, but in April, we'll go back to our normal times. So let's get started. Just a little bit about myself. For those of you who don't know me, my name is Danny Naz. You might know me on Twitter as the Pup of Wall Street. And this is my office hours for my members. It's going to be a 75 to 90-minute session. I'll run this every 2 weeks, and I'll review everything from the market to my process, hunting for trade ideas. We'll go over my watch list, setting alerts, and more. So towards the end of the session, we're going to leave some time for chart requests and for a Q&A session. And I will be using TrendSpider. We might hop over to TradyTix and to Black Box Stocks. Those are the three softwares that I use to trade primarily. And we'll also touch a little bit on the educational platform that I run, as well as the executive plan, which also includes coaching calls. So let's get into the chart. So bear with me 1 second while I call that up. And of course, today we had FOMC. So we've been waiting for this moment for quite some time, for quite a few months. And, you know, that's behind us, right? So we know we get the 25 basis point increase in rate. So I think that's good. I think that's kind of what was expected. I think people were nervous that maybe it was going to be a 50 basis point, but it's not for now. And what we'll have to do now is just wait and see for the next FOMC meeting, which I believe the next rate hike potentially will come in June or July. I don't recall what the specific date is. But this is what we have now. And so now all we have to worry about is high oil prices, high gas prices, the war in Ukraine, inflation, just a run of the mill market, what we've been dealing with for the last few months. So, it's good that we've got this one event out of the way, but we obviously have a lot of other macro things going on. So let's go over SPY real quick. So just get this zoomed in here. So you could see we had this death cross back on March 14th. And yeah, that's basically when the 50 SMA, which is in blue, crosses under the 200 SMA, which is in red. We are on the daily chart for SPY right here. And yeah, I mean, so you see this black line here. I just dropped that in. That's the 21 EMA. So you could see back here on the first, second, and third, it acted as resistance, couldn't break through. So it pushed right back down to this 415 level, which I've been monitoring. Came back up on the 11th, right back to that 21 EMA. It got rejected again. And so, of course, we pushed right back down to 415. So this actually looks like a bit of a double bottom right here, because we did break the high of that breakdown right here today. So SPY looks better, right? So we had a nice bounce off 415, nice continuation today. However, we're still under our downtrend line. Now, initially I had this as my target zone back here, right? That's my target zone. We nipped it right here on the 24th and we bounced right back up. So that was that 1272 extension to the upside. So there's two ways to look at this relief rally right here, right? It could be just that. It could be a relief rally. It could be a dead cat bounce. It could be a counter trend rally. We just don't know yet because we still have the 50 SMA and the 200 SMA up above, and we have all of this supply right here from everybody that's bought from over here. So, guilty until proven innocent. RSI is breaking out. We just went into a TTM squeeze on the daily chart today. So we just have to be patient and wait. I'm not ready to say, bear market over and we're going higher. It's just anytime you look at the stock market when it's made these dramatic drops. Look at the counter trend rally that we got right here. Right? So we made this drop, counter trend rally right here. We made another drop, counter trend rally right here. We're making another drop. Is this a counter trend rally? And I think that's what we have to keep in mind. Very likely it could be. You know, there might be something that's already happening that heats up, whether it's, you know, inflation, oil prices, the war in Ukraine, or it could be some event that we're not anticipating, a black swan event that pushes us back lower. We just don't know, but there's just a lot of things going on right now. And what you have to understand is if you are trading in this environment, you have to watch to see where relative strength is. You have to look at what's bucking the trend, what's not following the market when it's dropping, what's going sideways or up. And that's basically that's what my job is. My job is to find, you know, the pearls inside of the clams. It's to find the hidden stocks that are showing this relative strength. And that's what I do every single day, from scanning, from observing the market, and just from really, you know, watching my watch lists and reviewing these charts every single day. So let's take a look at the Qs. And the Qs, very similar story, slightly different in a sense that look at how we came right in. Let me zoom out a little bit so you can see this better. We had our COVID low down here, and I drop an anchored VWAP here. You can see that anchored VWAP, we could track it. That's exactly where we came this week. Yesterday, we came right down to that anchored VWAP. Didn't touch it, but we came pretty damn close and bounced right off of it. So nice continuation. In this respect, we actually broke the downtrend line. And again, we did have the death cross back here on the March 1st. So that 50 is still declining. The 200 is flat. And we did close over the 21 EMA today. We are now coming back up to that 11.2 anchored VWAP. That's the 11.2 low, which is from right here. And you could see nice bounce off of that anchored VWAP from 11.2 right there. And now we're coming back up to it to test it to see if we can break higher. So I think for me, that's going to be my first test. Then around 350, which is probably where we'll meet the 50 SMA. That's going to be your second test. If you could break that, we've got to get back over the 200. I think if we can get back over the 200, you know, in the next, let's say 2 to 4 weeks, then I think we have a chance to continue to push higher and possibly revisit the highs from late last year. But first things first, we have to just observe. And so most of you know who have been with me, I've been calling for this target area for probably about a month and a half, maybe 2 months. Pretty much hit the nail on the head, came right into that target zone, and we reversed out of it. Now, again, very similar to SPY. It doesn't mean that this is the bottom, but this is a bottom. And that's what we have to treat it as, a bottom for now. We have to just, again, continue to address proper risk management, take our trades one day at a time, and then we go from there. Okay, so that's the SPY, that's the Qs. One other thing to touch on is the VIX. So this is VXX. This is the ETF based on VIX futures. And so you can see we had a really big spike yesterday, a lot of volatility, came really high. I think it was up over 40% at one point, and then it came right back down. So we're going to have, you know, potentially these volatility spikes. If I zoom out some more, you can see throughout the COVID drop, which was back here, we've had these little spikes, right? Spike, spike, spike. The one thing that's different now is these spikes were all contained within a channel. This spike here is different. And it's different because of oil prices. It's different because of the war in Ukraine. So as volatility remains elevated, it's going to make for a very choppy and volatile trading environment. And so again, these are the types of times where you want to undertrade, right? Not overtrade. And you want to take quicker profit. We're not looking to hit home runs here. We're really just looking for, you know, bunt base hits, singles, and maybe some doubles. I think that's the most you can expect out of this market. Now, we've been able to capture some really good trades in the last 2 months, but they're very far and few between. So we just have to be cognizant of that and understand that this market is very different than last year, and it's certainly different than 2020. And until these these events like the Ukraine war and the supply chain issues and COVID and oil and gas prices, until all of that comes, to a head and starts to dissipate, we're going to have to deal with this type of environment. All right, so let's just dive into some of the names that we've been trading. Let's go through, let's take a look at ABBV. So this is one of the names that I've been talking about for a couple of months now. I put a trade out alert. The second entry was on 2-2. First entry was back here on the break of the cup and handle. Second entry was right about here on the break of this consolidation range. And we nailed it, right? We nailed the entry here. We nailed the entry here. Look at how it's riding. It's 21 EMA up. We have not closed under that 21 EMA in almost 2 months now. And we're just continuing to push higher. And so, one thing I would say is if you're still in this trade, you have to be managing it. You have to be using some sort of trailing stop loss. You can use a trailing stop loss. You can use a hard stop. I like to use the ATR trailing stop. That's this blue line that you could see here. And if I just turn everything off for a second, you could see how the price really respects this blue line, this 3 ATR trailing stop. And so those are the types of indicators this is the type of indicator that I'll use to help keep me in a trade. Now, when I see a stock like this get extended too far above its 21 EMA, like you saw right here, that generally signals it's ready to start either consolidating or pulling back. And so at this point, I would start to raise my stop losses, possibly to 150, maybe to 152. I mean, you could keep it at 145, and that could potentially keep you in the trade for a lot longer. But we've already, if you took the entry from down here, we're already up 32% on this trade. I will take that all day, every day in this type of market. So again, you have to build your own rule set. You could base it on my rules, adjust it to what you like. But really important to have a rule set in this market, especially in this market. So here's another one, Antero Resources. This is an oil play. First entry on 221 over 2170. We caught it right here. Second entry over 2609. We did get that breakout, but it failed. And so look at ATR here. It still keeps us in this trade. I would have my stop losses at or around 2276. But really, I'm watching to see, does it hold this back test of the 21 EMA? If we hold the back test of the 21 EMA, I think we're good to go. We'll possibly get a retest of the 1618 extension and then over that 2862 to the upside. Didn't put a trade alert out on this, but look at Shopify, falling wedge, positive divergence. So positive divergence, basically you have on price, you have a low and a lower low, which is what we see here. But on RSI is doing something different. It made a same low, but it made a higher low here. So it's showing a bit more relative strength while price is falling. So this is called positive divergence. And we caught a nice breakout over the falling wedge here and a close over the 382 Fibonacci retracement level at 1538. So if we hold this level, we could take this trade possibly back up to 1550 and then 1600 to the upside. DAC, I did not put a trade alert out on it. We're still in this kind of zone of resistance. I'll go up to the weekly chart and you could see it's made a really spectacular recovery from these 2013, 2014 highs. And it looks like could be potentially an ending diagonal. So I didn't want to put a trade alert out on this. I'm also not too familiar with the stock, but from a technical perspective, I'd probably want to see a rejection off here, a pullback, and then maybe a push higher. All right, next up is DE, which is Deere Company. I know I put this trade alert out on 313, was waiting for that close over 400. You could see here, we got to push through 400 right here. Now, if you took, I always say, and just to clarify, I always put a daily close over 400. Why do I say that? Because look what happened when we broke 400 here. If you would have taken this trade, it doesn't close on the day over 400. It actually falls right back down. And so really important to wait for those daily closes. When I put that, it's just good practice. So right now we're still waiting. We tested 400 again today, got rejected off of it. So this is just not ready. So we just have to be patient on this stock. All right, next up is FCX. This is Freeport McMoRan. And this is probably the third trade alert I've put out on this over the last year and a half. I think the first one was back somewhere over here. Second one was right off of here. And now my third one was over 46.10. We did get that first test of the first target at 1272 at 50.65, but we failed and came right back down to our trigger, even failed the trigger and started to bounce. But structurally, it looks okay. We're back over that 21 EMA. So going to be watching to see in the next couple of days, can we break this flag? Because that's exactly what it looks like right here. It looks like it's flagging right here. So if we could break the flag, possibly could take another entry off of this target 50.65 and then 56.22 to the upside. All right, next up is FMC. This is a chemical crop company. We're seeing a lot of agricultural companies, fertilizer companies moving. And I think this is due to what's going on in the Ukraine. Ukraine and Russia do supply these types of products. And so now that we're basically not able to trade with them, the more US-based companies are moving. And so that's exactly what we're seeing here. Did have my entry over 119.61. We have got that entry, slight back test, and we came very close today to our 1272 extension at 132, which is our first target. It did peel back and close lower, but this trade is still up about 6%. What I like to do once I'm at like 5 to 8%, I like to move my stops up to break even. I think this is a perfect way to de-risk the trade. The worst thing that can happen is the trade reverses on you and you get stopped out break even. That's what we're really trying to do in this. We're trying to de-risk our trades so that once we're in the green, we want to de-risk it, put our stop losses in place, and then trail your stop as the stock moves higher. All right, next up is LAC. This is Lithium Corp, Lithium America Corp. This one I'm still watching. Falling wedge has not broken out yet. We had a false breakout last week, came right back into the wedge. And that 21 EMA right now acting as resistance. So we have earnings coming up next week. It's a tricky play. It's a very tricky play because if we get that breakout prior to earnings, I probably wouldn't take it. I don't like taking trades prior to earnings. I think it's just too risky. Better to wait. If we gap up on earnings, then we could slap an anchored VWAP on that, very similar to what we could do here. And then as long as we're above that anchored VWAP, we can take the trade. Below it, you have to be very careful. So we're still being patient and waiting on that. Here's ZIM, another great case study here. Took the breakout here, that back test of that 21 EMA. The next trade alert went out at 74.59. That was right after earnings. So we gapped over on earnings and we held that, right? And then we back tested that next day. You can take a look, I'll zoom in here. Gap up, back test, closed over that trigger, over that 74.59, 1618 Fibonacci extension. And now we've had, let's see, 7 straight green days. So what am I going to say? We're a little extended here. I would expect this, if it continues to move higher, it's probably going to pull back sharply, right? So, look at how we have a nice move higher, pulls back. Nice move higher, pulls back. Nice move higher, pulls back. We've had this nice move higher. So certainly if you're not in this, I would not be getting in. But if you are in, let's throw that trailing stop, right? Trailing stops right now at our entry. I would move this higher. I would probably move it to somewhere around $79, $80. If you get stopped out, you get stopped out in profit, right? Right now we're up 18% on that trade. What if you took profit at 7 or 8 or 9%, right? It's still a green trade. But the other thing to keep in mind, we have 4 dots into our TTM squeeze, but RSI is now in overbought conditions. And so that doesn't mean we can't continue to go higher. It just means we're probably closer to a top than getting ready to pull back. So just keep that in mind on ZIM. Next up is ticker X. This is US Steel Corporation. So took the trade over the 30.52, which was our previous high here. You could see we did fail initially and then came right back up, back tested it, starting to fail at our first trigger at the 1272 extension at 33.92. The other way you could look at this too is we had a descending trend line. And so you could have taken the initial trade right here on the breakout. Beautiful move right past, it was really strong, right past our previous high. So in any event, this is still looking pretty good. As long as we hold over 30.52, I would de-risk and put my stops just slightly underneath there. And we do have earnings coming up on March 29th. So watch to see if we can crack 33.92 prior to earnings. We could see a move back, or not back, but a move up to 38.25. NUE is a new name I put out. I think that was yesterday. And so we did get a back test and hold of 128.59 yesterday. Perfect. Today we had a spinning top. It failed at 136.35, which was our first target. Watch in the next couple of days if we could break that level. If we can, we should test the highs at 141 and then potentially make a move up to 150 by earnings, which is in April 21st. So this one's looking pretty good. A couple of other names that I've been watching. This is Expedia. I had put out a trade alert on this back on 2/8. It did break out, but eventually it did fail. I do still like this trade. I like it now where it is for a test of 200 and then potentially back up to test 220. Earnings is already passed, so no worries there. Let me turn off that ATR. And we're back above that 21 EMA. So this is looking pretty decent. Another one that's looking pretty good is Johnson Johnson. We saw, I think it was 2 days ago, I believe it was on Monday, there was some news about a new variant in the Shenzhen province of China, which caused some factories to shut down. And so we saw mRNA push higher, we saw PFE push higher, and now we see Johnson Johnson starting to move higher as well. So watch Johnson Johnson. It did break out already. It back tested 173 and held. I think this is still a good trade if you're not in. As long as we hold over 173, we should see 177 and then 179. If we can break 179, then let me just put on my extensions. So 186 to the upside would be our next target over those previous highs. And then if we can crack that 1272 extension, then 194 can work as well. NTR, nothing really to see here. This was another fertilizer play, I believe. CF was the one that I really liked. We pulled back today, but this was another, pretty good trade call out if you caught it. On the break of 74 here, we had about a 30% move, and now we're flagging, or we're a little bit of a pennant actually here. So you could see the pennant forming potentially right here. So whenever you have a big move like this, you're always going to consolidate a bit. We could potentially take this back through 93.50, but I think a big portion of this move is done. You're going to have to wait a little bit for this to consolidate. And I'm going to go through a couple of other names, but in the meantime, if you all have any chart requests, feel free to drop them in chat, and I will get to those in just a minute or two. Another name that I really like right now is Costco. So, with inflation, prices rising, especially with gas prices being high, Costco in some markets does offer gas, and obviously they offer, bulk pricing on a lot of their items. So, I think this is a play that we should watch. We had a break of RSI back on the bottom test of the wedge here. We also had a TTM squeeze fire off today. We did get rejected off the trigger at 550. And, that's fine. We had right after earnings, we came right up to about 549, 548-ish. I'm fine with that. Let's be patient. Let's wait for that daily close over 550. And then my target to the upside would be 571, 599, and then 564. And then UPST still looking pretty weak, but holding over 100. I'm keeping a really close eye on this. I really want to get back into this. I want to get some shares for the long term. I just want to make sure that the bottom is potentially in on this name, but I really do like it. So those are pretty much the names that we've been trading, the trade ideas that I've been putting out. Let me look to see. There's a couple of more. Kroger over 45.32. Caught that right here. Big move. We went over that. Arch was another one. Over 103.62. We caught this move as well. max of 54%. So anybody that's telling you that there's not relative strength in this market and you can't swing trade is lying. The problem is you have to know where to look. You need to be able to scan and find these trade ideas on a daily basis. And you have to get out of your comfort zone. You can't rely on the same names that everybody's been trading for the last 2 years. This is a very different market. You have to trade a very different way. So, I know sometimes these names that I put out, they may not seem familiar to you, but I would really encourage you to do your own due diligence on some of these names. And understand that here, so like Arch, right, it's a second largest supplier of coal in the United States. So with what's going on in the Ukraine, it makes a lot of sense that we would look to source other materials for energy, not just oil, right? So coal, uranium for nuclear fired power plants. Look at URA. I know I put this out I think last week or the week before, right? Broke its falling wedge. CCJ was another trade idea that I put out. That's a uranium play. So, there's a method behind my madness. There's a reason why I'm putting out the names that I'm putting out. It's not just that they're good technical plays, but there's some fundamentals behind them as well, right? When we watch, money cycle out of, energy and out of, tech stocks, we need to know where the money is going. It's not going into someone's pocket. It's not going up in the air and sitting on the sidelines. It's going somewhere. And it's my job to find out where that money is rotating to. So, all right, let's take a look at some chart requests. So Raj is asking for BAC. This is Bank of America. And I haven't charted this one in a while. So let's just take a quick look. So I have been watching. Before we do that, let's look at XLF. So XLF is the index for financials. And you could see this is the third highest weighting in XLF. It's been still fairly weak. So let's go back to BAC. Certainly not my favorite index right now, but let's chart it out and let's see where we're at. So I'm just going to run a fib retracement from here. This will give us a sense of where we are. So we came well past that 786 retracement right here. And looks like we just closed right above that 21 EMA. Let's throw on the 50 and 200 and see where we are. And yeah, so here we go. So now we got that 21, right? But as soon as you break that 21, now you got the 200 SMA right above. You also have that 50% retracement at 43.29. So got to be careful here. We do have a flattening 200, which is okay, but we have a declining 50 SMA. So that's something we have to really be cognizant of. We have to pay attention to that. There's no squeezes here on the daily chart. And it looks like RSI is going to get a test of 50 right where that 200 SMA is. So this is what I would say. If we break the 200 SMA, if we get a daily close over the 200 SMA, that's potential for a trade right there. You could use the 21 underneath as a stop loss. Just got to be careful when we come up to this 50 SMA. That would be my next test over the 200. But yeah, right now, let's take a quick look at the weekly. Let's take a look at 30-minute. Take after hours off. Yeah, so I mean, we're in a rising channel right now, so it doesn't look too bad. Keep an eye on the lower time frames, right? You see how it's struggling with the center channel right here. If we can get back above that center channel, let's take a look at some levels outside of the fibs that we can look at. Yeah, 43.54, 45.31, and then potentially 47 to the upside. I mean, these would be the levels that I would watch to the upside if we break this recent high of 43.07. So over 43.07, you have 43.54, 45.31, and 47.02. Going back to the daily chart, if I take this off for now. Let's do a fib retracement from the previous high to the previous low. You're going to want to watch 45.54. That's your 618 retrace from the prior swing high, swing low. That's going to be really important. It's no surprise to me that that 50 SMA is also right there. The other thing we could do, we could drop an anchored VWAP right on that swing high. We have not broken that yet. So we need to really break that first. We break that, then we know from this prior high that the bulls are in control. Look at also we're in a little bit of supply zone. If we were to break that level, right, we don't have really a lot of supply until about right here. So we have a potential 9% move with very little supply in between. So that's kind of how I would look at BAC. Let's take a look at LABU. This is a directional bull for Biotech. Not really much to look at here. You've got a declining 500, a declining 200, declining 50, and a declining 21 EMA. Now watch here, right? You see that the 21 here acting as resistance, acting as resistance, acting as resistance. You know, if you're interested in this and for a short-term trade, wait for a daily close over that 21 EMA. Let's take a look at the weekly. Yeah, it's pretty ugly. It's even lost prior. I would look at that as a band of potential support. We're pretty much right there right now. This is at its lowest. So you just got to be careful with Biotech. If we hold these levels, yeah, maybe there's a bounce play here, but I don't see a lot of potential necessarily in this. If we draw a channel, yeah, when we're falling outside of that channel. So my inclination when I look at this chart, even though RSI is pretty oversold, we got a TTM squeeze fired to the downside. It looks like it might fall some more. It's hard to say. I'm not super familiar with how these directional, 3X and 2X type plays. They're not the type of charts that you would, apply proper technical analysis to, because they do act a little different than regular charts. But just based on what I see, I mean, this does look like it can go lower. All right, let's take a look at SE. This is the weekly chart. I know a lot of people have been talking about SE. It's gotten absolutely hammered, but when you have a stock that goes 1,285% in 2 years, it's a lot. Even though it's a good period of time, it's still a really big move. So let's look from a Fibonacci retracement. You could see we did lose that 786, and we're coming right back up. Let's jump into the daily chart. We've got a declining 50 SMA. We've got a declining 200. We've got a declining 21 EMA. So it doesn't look great. Now, here's something that I just saw. So you have a low and a lower low here. And then you've got a low on RSI and a higher low here. So this is positive divergence. This is actually a reversal signal. So what I would watch for is, maybe can we break back over this band right here? If we can, let me just get this anchored properly. Then you might be able to see a move back up to the 50 SMA here at 144. So you grab the 120 Cs weekly near the close. All right, so let's take a look at the 30-minute. All right, so it looks like we gapped up today. We back tested the top of this prior resistance, which now is looking like it's acting as support. So we potentially can make a move to 115 tomorrow. Let me get this off here. Let me put this on. So we have stacked EMAs to the upside. TTM squeeze is dissipating. We did get into overbought territory on the gap up. RSI did cool off a little bit. So if we can break 115, then yeah, I think you could see 121, potentially 124. So what I would just, I would just be concerned if we start to lose, let's say, the 8 EMA, certainly not that 21 EMA. That 21 EMA right now is at 103. It looks like it closed strong. Let me look at after hours. After hours is still fairly flat, although it's early. So yeah, it might not be a bad play. I think what you have to hope for is that we get another gap up tomorrow. If we get another gap up tomorrow, I would consider de-risking that position, because with gap ups, they tend to lately they tend to send it back down. So just watch pre-market. If you're gapping near 120, I don't know how many contracts you have, but it might be something to consider to take some off the table, grab some profit, and de-risk the trade, or just sell the entire position. And then if it does roll back, you could roll your profits into a longer strike, maybe to next week's 120. Just a thought. All right, Mark, let me take a look at SM. So this is SM Energy. Obviously, I've never charted it before. And let's take a quick look. Actually, let me go up to the weekly. So that's interesting. So that's a pretty good sign right there. Kind of can look at this as a very large head and shoulder, inverted head and shoulders, possibly. Let's see. Yeah, it looks like we've got another level right there, another level right there, and right there. So this looks pretty decent. I think if we hold 3409, then you've got a potential to test 4250 again, and then over 4250, $60. Let's go down to back to the daily chart. And what I'll do is I'll run a fib extension off of, off of this swing high right here to that swing low. And yeah, 41 is that 1272 extension. Definitely could see why it failed right there. Yeah, I think back over 3765, I think will be, well, let's make that 3825, I should say. That's your prior, look at your prior high, right? Resistance here, resistance here, resistance here. Finally gets a breakout. It retested a hold, retested it, hold, retested it, hold, retested and fails. Gap down here. Watch for that small little gap fill. I don't know if the gap snake will find it. No, it's too small. But yeah, that's what I would watch for. Watch for that small gap getting filled right there. And then you could probably take this back over 3825, target 4180. If you get back to 4180 and you don't get a daily close over it, just be careful. If you do get the daily close over it, then you could probably take this back up to 4631 in that range. So, all right. If you don't have any other chart requests, any questions that you want to ask, it could be about anything, chart related, market related. I don't know the answer to the meaning of life, so don't ask me that. I don't usually do religion and politics, so please don't ask me that. But anything else is on the table. Feel free, ask away. We do have some time, a little bit of time to chat, so feel free. And if you want, come off of mute. Feel free to ask me, over voice. Completely cool. How's it going, Raj?
Yeah, good. Danny, how are you?
I'm very good. Good to see you.
Yeah, same here. How is your Puerto Rico trip?
Say again?
How is your a vacation to Puerto Rico?
Oh, it was great. Very, very good. It was well refreshed. We're trying to plan our next vacation. So yeah. It's good to kind of mentally unwind a little bit and just get away for just a short period of time.
Yeah. My question is days like today, what is your strategy? to involve? Because we all know that we are at the bottom. We are trying to look for the reversal. It could be dead cat bounce, or like it could be a strong rally, start of the strong rally. Correct?
Yeah, I think it's a great question. So what I try and do on days like today is not watch the market too much, because you could see, like, let me go into, like, let's say a 30-minute chart, right? And let me take after hours off. Look at how today unfolded, right? We gapped up, we came up on SPY to 434, sent it all the way back down to 426, sent it all the way back higher. I mean, as a trader, it drives me nuts. Now, yeah, you could scalp these moves, but you've got to be really, really, smart. Now, check this out. Let's throw that gap snake on. Look at what happened. We gap up, we have that move higher, it closes the gap, and then it sends it right back higher. So, if you're observant, you can watch the way the market works. It likes to do these gap up, close the gap, and bounce type of moves. So, honestly, I like the way we closed today, but I'm not sold yet on if the bottom is in. I think we have a big hurdle out of the way with FOMC coming in exactly where everybody hoped it would. A quarter point basis rate hike, right? Everybody kind of said that's probably what we're going to get. It could have been a 5, right? Could have been 50% or 50 basis points. But I think with everything going on with the market, with inflation, with Ukraine, with coronavirus, supply chain, so many things going on, I don't think they wanted to spook the market like that. So, but they did signal that they still want to do 7 rate hikes this year. So I think we have to really still remain cautious. But I think this is our first good sign. We broke over 426 on SPY, which I thought was really important. And now we have a lot of supply up above. So that's what we have to be really concerned about now. It's not going to be a straight shot back higher. You have supply. You've got the declining 50 SMA. You've got a flat 200 SMA above. I think if we get over 440, I feel a lot more comfortable, but still not sold. But if we get back over 457, I think we retest the highs. So the way I like to put it, and Brian Shannon says, is the market is guilty until proven innocent. So we just have to remain cautious. But I think nibbling here on some of your favorite tech names, I think is okay, so long as you have proper risk management in place and you have the right type of stop loss.
What about the gold? Because I see that it is kind of turning it around. I don't know, but
gold has been pretty wild. Yeah, I mean, I'm still pretty bullish on gold long term. It's actually probably better not to look at candles. But you could see we made a really big, strong move higher and pretty quickly, and now we're pulling back. So what I would do is I just drop the Fibonacci retracement there. And you could see we pulled right back to that 50% retrace. So we've done a 50% retrace off of this big move here. We still could come back to the 618, potentially 176. If we do and we hold 176, I think that could be a good area to get back into. But I'm pretty bullish. I mean, look at also how it came back down to 50 on RSI, and it's holding as well. So I think it still looks pretty good, but it made a big, strong move, and now it's coming back down.
what do you think oil we should get back in because of the dollar is going to rise now?
I'm sorry, for which ticker?
Like oil, Oxy or something. Any other oil stocks you think we should get back in the retracement?
Yeah, that's another one too. Like, what I would watch for, honestly, with oil is the 21 EMA. I think we're still a little extended on some of the oil names. Look at Chevron. So Chevron's a little closer to its 21. You see how down here the 21 acted as support? Watch how it acts here. If we hold the 21, I think you're in good shape. But look at here on ExxonMobil. We've already lost the 21 and have coming back down. So it looks like Chevron still looks pretty good. I know Oxy, we traded that one a little bit. I don't know where my trade plan was, but look, we came up to close to that 3618 extension up here, and now we're pulling back into this little fib cluster right here around 51.52. So I would watch it. Just be a little patient with oil. It's consolidating, right? So you still have a little bit of a range here. that it's in. So I wouldn't get too aggressive. Watch your 30-minute chart. If it falls below, let's see, if it falls below 51.43, let it drop. But if it stays above there, then, potentially, you could watch for a move back up to the highs right around 58. But in this range here, it's just going to chop around a little bit. But if it does fall below here, I would just let it drop and just be patient. And keep in mind, oil has made a big move, but because gas prices are high, governments are going to start to, add more supply. That's going to bring the price down. They're going to start putting other policies in place to bring the cost down. So you can't look at it as, you're going to get another big move like you saw these two big moves that we got. But we might continue to grind higher for, the next, 6 months, because when it comes to oil and when it comes to refining, it's not like you could just turn a refinery on and start, refining, someone else's oil. Refineries are set up, whether it be like our oil is shale. It's different than the oil that you would get from the Middle East. So it's not like you could just flip a switch and start refining different types of oil and fix the supply issue. So yeah, I mean, you have to look at it from that standpoint. I'm looking more at like, let me take a look at the, where are my, let's see, here we go. I definitely would not be touching China stocks. What is it?
Actually, TAN also looking good. Solar.
Yeah, that's exactly what I was just looking for. So yeah, I think solar, I think any of your clean energy, TAN,
ICLN.
PBW, and also what's the other ticker?
ICLN.
Yeah, ICLN. Yep, there it goes. Oh, just lost it. Those are the names that I would be watching, because that is something that we can do. We could start shifting our energy policies more towards clean energy, which makes a lot of sense. Clean energy and also clean energy infrastructure, charging stations for electric cars. I mean, those are the things that I would be watching this year. Watch for signals from the governments and in terms of energy policy. This obviously is going to hurt in terms of where gas prices are right now. And so we're not gonna see $3 $2 gas prices for a long time. And so what that's going to force governments to do is to change their energy policies. And in that language, that's what you have to watch for. What are they going to talk about? Are they going to shift? Are they going to start building solar farms, wind farms? Are they going to invest in clean energy infrastructure? That's lithium, right? They would supply batteries. So you have to start thinking outside the box. Also, commodity prices are going to continue to go higher. So looking at lithium, looking at steel, looking at copper, that's why I've been putting out names like LAC and SCCO, Southern Copper, and FCX Freeport McMoRan, which is another copper play. Again, this is the psychology of how I'm thinking about approaching the market. Where is the money going to shift to? Instead of reacting, I want to preempt and I want to just be ready for where the money is going to flow to.
And regarding the global markets, what do you think? I think
it's tricky. It's tricky. I think a lot of it's going to depend, especially with the European market. So a lot of it is going to depend on what happens in Ukraine. I think there's a lot, especially with emerging markets like EEM, Chinese stocks got hit really hard. They're starting to bounce back, but I'm not ready to call a bottom on them. I think it's really difficult right now.
Yeah. When we try to create that anchored VWAP, if at all I'm trying to create another one, first one is going to coming from the recent higher, something like that.
Yes.
Then I'm trying to move the location. And I'm trying to create a new one to starting from like a COVID lows or something like that. I don't know. It is going to sitting on top of the previous one.
Yeah, I mean, you want to, are you using TrendSpider?
Yes.
So one good thing, let me go to a different chart. Let's take a look at maybe CMJ. And let me turn off, let me just remove this, and then I will turn off all this noise. So you can pre-install some of your anchored VWAPs. So some of the ones that I really like, the year to date. So that will start at the beginning of the year. You have your lowest low and your highest high, right? So that you could see where for CMG, we're stuck in between those two anchored VWAPs. So this is what's called the anchored VWAP pinch. So between this low and this high, price is stuck in between. If you could see back here from that highest high, it's hitting resistance here. It had a false breakout, broke down, resistance here. So you want to see for CMG as an example, you want to see it over that price or over that line. And then, you could look to see, well, look at all the supply up here. So you might have a pretty quick move, from here to there, because there's not that really that much supply, in between. But when you're inside the anchored VWAP pinch, it's tough because, you don't know which direction you're going to go. You can come up to the top and get rejected. You can come back down to the bottom and bounce. It all really depends. And, you could use this on multiple time frames. So, here I'm using it. I'd have to adjust the lower low for a lower time frame. So we would probably do, or a higher time frame, maybe 50. So here from a short time frame from a previous high, we're above both of those anchored VWAPs. So this is pretty good. So that's how you would use it. There's other ones you can use. The gap anchored VWAP, I think that's pretty good. But that one here, we saw a little gap up today. So the gap starts right on that gap up candle. You see what happens when it loses that gap anchored VWAP, tries to retake it, it fails, finally starts to break out, it retested, it holds, and it bounced right higher. So this is a strategy into itself, using an intraday gap anchored VWAP. So on days where the market gaps, use that gap up anchored VWAP. Make sure it's turned on to that day's gap, and then watch the candles as they move, right? You can even go down, let's go down to a 15-minute chart. You'll see more candles. Gives you a little bit better sense of what's happening here. You could even go down to a 5-minute, right? Same thing, you're seeing rejection candles here. Rejected here, false breakout, hammer, inverted hammer, comes right back down, breaks out, holds all these candles, and here you go. There's a pennant set up right there, right? You could take the break of the pennant with the anchored VWAP or the gap VWAP, and now you got a nice play here. This on CMG was, about a 1% move, but with options, that's a pretty decent play.
I mean, I am trying to create a new anchored VWAP from the COVID lows. So I just went to the indicators and I tried to create a new anchored VWAP, which is always starting from the recent high.
So if you want to create the new one to the, let's say the COVID low, you're just going to right click on that anchored VWAP and then create it.
Okay.
Right. So you see from here, look at, we tapped it last week. We tapped that anchored VWAP from that COVID low. I think right now the COVID low anchored VWAP is a really good anchored VWAP to use because, any of these beaten down stocks, let's see, it can even look like maybe like a Tesla. You go to COVID low, create anchored VWAP. Well, Tesla's not really that close to it, but in a lot of names, you can look at that COVID low anchored VWAP and, look at names that are approaching it. It's a good way to kind of keep a close eye on some of these. This is probably going to be a little higher. And then it comes, and then what I do is what I like to do is what I call the anchored VWAP pass. So you could see I drop an anchored VWAP here. I dropped one here. You could see it's kind of testing here. So I'm going to drop another one here. And there you go. So this is coming close to here. I could drop another one right here off of that handoff. That's exactly where we closed here. I could drop
So like
another one here.
swing lows, what are the like lows you are seeing it, you are trying to make it as a VWAP?
Yeah, you could use the swing lows. You can use like where the pullback candles are. That's another way to do it. Absolutely. Like I would drop another one like right there. Right. And then that gives you levels of interest on the way back higher. Right. So we just tagged this one, held it. Now we'd have to watch 297, 310, but I would also want to put one here at the top, all-time high, it's right there. That's probably a level that you're gonna have to really watch, 310, which I already know from Microsoft. I know that's a level right about, yeah, right about 310, 311. So yeah, I mean, you can use, I really love the anchored VWAP, and this is very much how I would use it. I would zoom out to like a weekly chart and start taking from the COVID low, start taking these other lows, and that gives you a really good sense of where price is. And then you can go into like a daily chart. You can see how the candles react around those anchored VWAPs. And then you also can use your other strategies with it, whether it be, trend lines, whether it be, Fibonacci retracement. When you start adding up all of these things, it tells a story.
Yeah.
Yeah, and you can see we've got a lot of supply here right under these anchored VWAPs. So once we pass that, you've got a supply gap or a volume gap right here. So, the way I always look at trading, especially with swing trading, you could take a breakout of this downtrend line here on Microsoft, but I would only see this as a potential move from here to here, right? And the other way I would look at it is watch for a break over the supply zone. And then there's another trade right here to here. So, in this market, you have to define what your trade is. You can't just say, I'm going to get in and then hold on for dear life. Because this market, it could trade sideways for the rest of the year. And so you have to look at it from a couple of standpoints, whether you're dollar cost averaging into names that you really like, that you're looking at 3 to 5 years out, or if you're actually trading, looking at very specific moves, extracting 8% here, 20% there. That's kind of how you have to define how you're trading now. This isn't 2020 where the market just kept on going up and anything you bought, you made, 30, 40% on in a couple of months. You have to adjust your trading strategy accordingly.
And do you have any like a relative strength of finding during that end of the day or something like that?
So I don't have an indicator, so to speak, that I'm searching for relative strength. But what I am doing is searching and doing scans off of my watch lists. So I look for, let's say an RSI breakout over the 20 SMA. So let's see. So here you have, let me put RSI on. You could see RSI here coming back to 50 on Morgan Stanley. That looks pretty good. AMD, another one breaking 50, looking pretty decent. I like AMD here over 118. Let's look at Amazon, another one, right? I have to redraw this line. I haven't looked at Amazon for a while. Broke 50 on RSI, not bad, right? But when it comes to like watching for relative strength, it's more about looking at what SPY did for that day and looking at the names that outperformed. If SPY was flat for the day and Amazon was up 5%, Amazon showing relative strength. It's more about building a watch list and being comfortable finding looking at those names and searching for the relative strength within. The other thing you could do is look at the indices, right? What performed really well today? Well, KWeb looks like it was up 40%, right? So then I would look to see, well, what's inside KWeb? Techie, BABA, JD. So let's take a look at BABA. And again, I'm not buying any Chinese stocks here, but you could see BABA had a nice day. JD had a nice day. It's probably a bad example, but BJK, this is gaming. I mean, it doesn't look great. iBuy, this could be at the bottom. This is like, I guess I don't have that mapped out. EEM is going to be similar. So let's look at TSM. I saw some people mentioning TSM today. So TSM, kind of interesting. I would still wait for this to break out. I wouldn't be taking it just off this move. But back over maybe 111, 112 looks pretty good for a 10 to 12 point move. LIT, this is lithium. I know we've been talking about lithium. I don't really see too much there, but we talked about PBW. So here, ENVX, let's take a look at that. That doesn't look so great.
Here we go. EVGO looks good.
There you go. So there's EVGO. It's got a nice rising channel. I would drop fib levels here. Struggling a little bit with, or it's holding that 382. I would drop an anchored VWAP here. There we go. Look at that. Resistance right off that anchored VWAP, but we have earnings coming up on the 23rd. So it's not necessarily a trade I would look for taking now. I would probably wait till after earnings. And if we get that gap up, then you could drop the anchored VWAP right on that gap candle and then take it from there. This is what I do. I go down the list. I look to see what performed well today in the indexes. And then I go down the names like ENPH. It's another one looking pretty good. That's why I had a trade alert over 183. Look at the failure here, failure here, failure here. I'll take this trade over 183. It looks pretty decent. I'll put on the 200 and the 50. We're over the 50. We closed over the 200. It's not bad. Over 183, I think we can target 198, 200, then 218. I think that would be my defined trade on ENPH. I would probably take this to 28 to the 618. So we only have a couple of minutes left, but I appreciate your questions, Raj. Hopefully I answered them.
And
but
I have I have a small request. Can we have a private Twitter feed for all of our members, premium members? Because sometimes when we get the email and anything got triggered, it will be easy for us to track.
I'm working on it. So I'm not going to do a private Twitter feed. I'm actually building a platform right now that's going to be for charts of interest, for executable trades, and then a general chat area. So I'm in the process of building that now. I think it'll be ready in the next couple of weeks. So I'll be sending out an email on that probably within 2 weeks.
Yeah, sure. Yeah, thanks.
Perfect. I appreciate your question, Raj.
Yeah, thanks.
All right. So any other questions, comments, concerns before we go? All right. Listen, I appreciate everybody. Thank you so much. Thank you for being patient with the schedule change. Like I mentioned at the top of the hour, we are going to do this Wednesdays at 4 p.m., probably for the next session, possibly one more session after that. And then I'll roll it back to the 7 p.m. Eastern Standard Time, our normal day, normal time. So appreciate you being patient with me. Thank you so much for being with me today. I do appreciate and respect all of your time. And like I said, if anything happens from now until then, just obviously DM me on Twitter, catch me in the room. I'm always available to answer questions and do chart requests. Now that FOMC is out of the way, I will have possibly more trade ideas coming. I want to see where we shake out tomorrow. Let's see if we get a continuation or a pullback. But I don't think we're out of the woods, but I think we've got, we're one step closer to normalizing the market a bit. So appreciate your patience. Hopefully everything has been well with you all. And I will catch you all on the next office hours. Take care, everybody. Thank you for being with me.
Thank you, Danny.
For those of you who are new to me or to my work or are not members of my platform, I do have an educational platform where I do email out daily trade setups first thing in the morning, 8 o'clock Eastern Standard. Got 20 plus hours of trading education, very much like what I did today, but broken up into different videos, more along the process of how I trade. I do have a top 10 long-term conviction stock list that I basically update weekly. I'm not looking to day trade or swing trade these. These are position trades. You'll get access to all of my TrendSpider scans, my watch list, my trading rules, my documents, unlimited chart requests. Obviously, you'll have access to the office hours that I run every 2 weeks, and then my weekend video that I put out on Sunday, which will have like my top 10 to 12 charts. And then obviously throughout the week that I'm putting out at least 1 or 2 a day, sometimes a few more. And then I'll do, chart recaps, kind of similar to what I did earlier. So it's pretty straightforward, $79 for the quarter, $275 for the year. But I do have another plan that a lot of people tend to go for that want to do one-on-one coaching with me. And so I know I have a couple of my coaching members in here. And so they know what this is all about. And so the good deal with this is like, if you're going to hire me as for one-on-one, my hourly is 90 an hour. So if you do the math for 4 hours is what you're getting with the executive plan, it works out to be like, I guess, what is that? 360. So $150 for the year for everything else. And you'll get those 4 coaching hours included as well. So I find it's really good for people that, most of the people that come with me, they either do 1 session and leave, or they do 1 session and they stay for months. I have some that I've been working with for years. And the one thing that I found in trading, and I found this with myself first, which is why I'm doing what I'm doing, kind of paying it back, because I've had mentors along the way. And I realized early on that I was spinning my wheels, looking at YouTube videos, trying to figure out what's my style of trading. And it really wasn't until I started working specifically with a couple of people one-on-one that I was really able to identify what kind of trader I am and what my mindset is and how to work on the different issues that I was having trading. And so having, the ability to get me on a Zoom call where I can record the session, we can go through things, and then you'll have that basically forever. You'll have my ear more so in terms of, priority support. And I also throw in my Fibonacci course, which I'm developing with Scene. So be safe out there. And of course, I've got your back. If you have any questions, you could always DM me in the room. And if you're not a member, you could certainly DM me on Twitter. More than likely to get back to you pretty quickly. So have a great evening, everybody. Take care.
Bye.